If you are going to buy a pre-construction residential unit and you're still confused about your tax implication, then stay tuned. You will get your answers in the next 3 minutes. What is up, YouTube? This is Yasin Nizami, your host, and today I am going to cover the tax implications in a real estate transaction from a buyer's perspective. Now, I will also cover this from seller's perspective, but it will be another video. And for that, you have to hit the subscribe button so that you will not miss it. So when you purchase a used or second-hand product, from Kijiji or on Facebook Marketplace, you don't pay HST on that, right? Same is the case in real estate transaction. So when you purchase a resale property or you're buying a pre-occupied, pre-purchased property from somebody else, then you don't pay HST in that transaction. Now, if you're buying a brand new product, for example, if you're buying an Apple iWatch from an Apple store, then you pay 13% HST on top of the price, right? Same is the case in real estate transactions. So if you're buying a pre-construction residential unit from a builder or from an assignment seller, you are supposed to pay 30% HST. Now the question is, who pays the tax? Is it the builder or you as a purchaser? That depends upon your intended use case. So if you are buying it as your primary residence, which means you are going to live in that property, oftentimes it is paid by the builders. It depends upon the agreement of purchase and sale. If it says price includes HST, then it is definitely be paid by the builder. Now, if it doesn't include in the price, then you as a purchaser will end up paying HST at the time of closing. Now, if you are an investor, you are buying it as a rental property and you are going to put tenants into the property, then you must pay HST, which is 13% of the purchase price at the time of closing. So the lawyer will actually ask you this question before the closing: Mr. Yasin, are you buying this property as your primary residence or are you buying it as a rental or investment property? Based upon your answer, the lawyer will calculate the taxes accordingly and will pass on this responsibility either to the builder if it is covered in the agreement of purchase and sale, or it will be passed on to you and you will be paying at the time of closing. So the key here is, guys, you have to make sure that you have enough cash available, especially if you're buying a pre-construction residential unit, because oftentimes people are not aware of that and they are surprised with the heavy tax expense at the time of closing. Now let's talk about the rebate program. So the rebate program is put together by Canadian Revenue Agency to discourage people who are flipping the properties in a very short time. So if you're buying it as your primary residence and if the price did not include the tax, then you ended up paying HST in the end. But what you can do, you can claim it back using this rebate program. So there's a form available on CRA website called New House Residential GST HST Rebate Application. You can fill up that form, attach your agreement of purchase and sale, and apply it online. You can get that rebate back. It takes up to 6 to 8 weeks to process the application, but given COVID factor involved, you may have to allow some extra time as well. But if you are buying it as a investment property and you are a landlord, then there is a different form for landlords. It's called New House Rental Application GST HST Rebate form. So you print that form and you fill it up and you send it either fax or email. This application process is not available online, and it also takes 6 to 8 weeks. But with COVID factor, you have to add some extra time into it. So how much you can get in this rebate program? So it depends upon your purchase price. If the purchase price is $450,000 or more, then you can get up to $24,000 back in this rebate program. So if it is less than $450,000, then you can get a little bit more than $24,000, depending upon your circumstances, because it may include a little bit portion of the federal tax into it. So to recap, resale property purchase, there is no HST involved. If it's a brand new pre-construction residential unit, whether from buying from builder or from a assignment seller, you have to pay 13% HST on top of the price. Now it depends, who pays it. If it's included in the price, builder pays it. If it's not, then you as a purchaser will have to pay it, and then you can claim it back from CRA using a rebate program that we just talked about. That's it for me, guys. I hope you liked it. If you do, give me a thumbs up and hit the subscribe button so that you don't miss my future videos. If you have any questions, please put them into the comment section and I will be happy to answer them. Reach out to me on my Instagram, Facebook, or Twitter account, or directly email me as well. Happy to answer your questions, and I will see you in my next video.